Okay, welcome back, guys. I'm just gonna go to the main screen so we continue the video. Now, okay, let me go back to this. Okay, I wanted to make some analysis, so I decided to, make a little video for the community. Now, this is the previous day here was the last day in July, which is 30th of July, and this is for those who traded on Wednesday, being the first of the 30th of June and 1st of July. Now, I'm just gonna use this horizontal line to this vertical line right here to demarcate, the previous candle and the current day candle, even though the new day has started right here. The new day has started right here. So I'm definitely not going to take too long for this video. Okay? I'm definitely taking not much of your time, so just listen up. Now, if you're new to the trading space, you have to follow this video because there are so many strategies out there that bores you to death, makes you want to go crazy even before you understand what is going on. So I'm not going to take you through the entire trauma, but I'm just going to hit it straight to the point. Now, this strategy is understanding that what makes you money in the market is the probability of something recurring over and over again, because you're gonna hit stop loss, you're gonna lose your account at some point in time. But what gives you longevity in this forex space or in the financial space is understanding what's involved at every point in time and trade and approaching the market in more sustainable ways. Now, does the daily bias idea works? Yes, it does work. Is it 100%? No, it's not. Because when you expect a market to break in continuation, it can simply reverse. And you wait for a setup, ending up losing that day entirely. And it has a way of affecting your psychology in different dimensions. Those are the insignificant things that happen in the forex space or in the financial space that most traders don't get to learn at a short run, but at a long run they begin to realize that, oh, these are the contributing factor that made them lose money when they were starting out. And that is where experience comes into place. So now I want to teach you one of the trade strategies, or what I call the rough strategy. It is based on three simple concepts: liquidity, time, and price. Liquidity, time, and price. Now, if at all we wanted to trade on on the 1st of July, this is how we would approach this market on the daily candle trading style. Now, if you look closely, I've marked out this candle low here using the black level. Excuse me, let me take some water. So I've marked out the daily low using the black levels, high and low. Look at it, high and low. This is the high of this day, and this is the low of this day. If we go back to the daily candle, because I'm on the 1 minute time frame, you cannot actually trade the market at any time frame, but you have to clearly understand what you're doing in the market. So if you don't know much, just go to the higher time frame. But then this is what I'm giving you. So I'm just gonna use the blue level, this blue uh, horizontal line, to mark out the high of Sydney like this and the low of Sydney right here. Now the idea is, we know from this market structure that this candle basically ended bearishly, because if you look closely, market opened around here, market opened around here, market opened around here and closed around here. So the trajectory is way off balance. But if I should go back to the daily time frame, let me see, just to be sure. Okay, sorry about this. sorry. So let's see. You see, so this previous day here ended bearish. Like I said, the opening and the closing price were too close, and that is what you are seeing right here. So the contract for that previous day ended bearish, and in ideal we should look for a bearish continuation. And how do I frame that bearish continuation? I can also frame it by waiting for market to probably give me a range here, come back here to either sweep or even come here to sweep the external levels like this and continue in such direction. But some days you don't have to approach the market that way. Now I marked out the high of Sydney and low of Tokyo, and I'm gonna go back to another concept of mine, which is the time alignment. Now I have a very unique entry model that you won't see it out there in the market because not many people know about it. Now I'm gonna bring this vertical line close to the 3 a.m. opening candle. Now I'm gonna show you how you can actually approach this. Now this right here is the 3 a.m. candle and it ended bullishly. So I'm gonna adjust this to this one, so that is at 2:59 Nigerian time. Now look at how tight this thing is. I bring this level to mark out, indicate the closing price of that opening price of 3 a.m. candle. I don't know if you understand. So right now, I can just adjust this back to the beginning of 1st of July. You can actually go to your candle and follow what I'm showing you, because there is an 80 to 85% chance that market will either take the previous day's low and the previous day's high. But what people don't understand is this three concept of liquidity, time, and price. You don't come to the chart whenever you like. You come to the charts to explore what the market is presenting to you. Now, on this day, I have a concept because I know that the previous day was bearish. There is a high chance that market will end bearish. But do I trade blindly? No. I'm going to trade it with understanding, because a day that can give you a bearish entry can also give you a bullish entry even in a better conditions. So now I waited. When I came to this market by 6 a.m. Nigerian time, I'm always emphasizing on the Nigerian time because that is the time you should get ready to come to the chart. Now market came and began to, this is a ranging uh, scenario. This is a ranging scenario because if market should break this level, I want to see a confirmation that is going to buy to the upside by break and retest and continuation. Now if it's continuing, the moving average should be able to support it by being below these candles. But if it's not, we are going to also see how it works. Now market came at that 3 a.m. closing price and broke it. If you look closely here, you see this mighty candle. Now waited for the market to come back again, at least as a confirmation, at least either come to fill that fair value gap that it left there or continue to go down. Now I'm gonna enter conservatively around this level because now it's now breaking out from there. So I'm gonna enter there like so in continuation of price action. You have to define your risk. 2 to 2.5 is fine. These are standard way to trade. You have to define your trading plan. Okay, this is my tolerable risk level. Now some other person can hold to this point, which is not a bad thing, but you have to define how you approach the market. And this was a good trade on this day. Now remember, the idea was because we know that market is definitely going to be bearish. We can also mark out this level, because if you go to the 4 hour, these levels are important levels. Actually, you can always go there to check, do your research, but use this strategy that I've shown you to trade, and you will see a change in your trading. Now, I don't want to make this video. I'm going to make a more detailed video for this approach, because my trading has changed. I always approach the market breaking it down into different levels. Now, some other person can actually approach this market like so, where you have a breakout and a retest during the key level of London section, and you come to the downside. Okay, people can also trade it that way, and it is fine. It's fine. So this is what I have for you today. I don't want to take a whole lot of time, but I can still go back in time and show you the approach. Now these are the same thing I actually trade. Let me just clear this out. Let me use this the same thing I trade right here. I think, let me just clear this off right here. So I'm just gonna go ahead and mark out this previous day's low like this, using these uh levels. Now using the gray lines, I'm gonna mark out the low and high like so. Now if we should look closely at this level, we're gonna mark out this Tokyo low and Sydney high. That is that. Now I'm gonna use the horizontal line to identify where the 3 a.m. closing price is. Like I said, if we want to approach this, you approach this with better understanding. I'm gonna mark out this closing price right here. That is the closing price. Now the idea is, if there is a sweep and let me get this off the chart. If there is a sweep and a reason to buy or sell, you sell. Now my entry is really conserved. Let's say now this is a high that if market should break it, it becomes valid, because this low is now a reserve low that market definitely is not going to violate most of the times. So immediately market did this, and see how supporting the moving average is. You can easily enter your trade, keep your stop below like this. Target 1:2, like I said, 1:2, 2.5. Now market went straight to that 3 a.m. opening price, and it respected it. The reason why we traded using that level is now because market has already come here to take liquidity. Okay, market has already come here taking liquidity. Now so many people would have gotten in around here because it's now trading above the moving average, and you can see the supporting momentum of the moving average below that level. So you can just easily enter it, keep your stop where you want to keep it, but definitely this is the right place to keep your stop loss and take profit around there. Now if I waited for the full day to play out, where, like I said, the market will either take the high or low of the previous day, and now market did what? At this level market came, violated it. You can just hold to the high of the previous day, keep your stop maybe a little bit above below here, or maybe keep a tight stop loss depending on your risk plan. Now this would have been a good trade, and you make money and you leave your trade, and that is it for it. So if you need a comprehensive guide, I'm gonna make more videos, but when it comes to these indicators, I've modified the time and how it works, because you have to understand liquidity, you have to understand time and price, and all those things will be detailed in a book I'll be releasing soon. Now, I've written so many books, and I'm sure that most of you have access to it and most of you don't. But for this, I'm going to share with you details on how to approach it, and also make videos to guide you on how to trade. If you're a beginner, Make sure you subscribe to this channel, like our videos, and share to your community to help them, understand that trading is not as difficult as people actually project it to be. So until next time, guys, peace.